Glad to be here again with you. This is Business Morning on Channels Television. I'm Chimeze Obi Iwagu. The Monetary Policy Committee of the Central Bank yesterday left its benchmark interest rate unchanged. All the other parameters were also left unchanged. The MPR was left at 11.5%, CRR at 27.5%, asymmetric corridor remains at plus 100, minus 700 basis points around the MPR, and the liquidity ratio was left at 30%. The pause follows 2 cuts of 100 basis points each in 2020. Let's hear the governor.
Considerations remain focused around tailwinds imparting upward pressure to domestic prices and key headwinds to output growth. The committee noted that inflation continued to be driven by supply-side disruptions arising from COVID-19 pandemic and other legacy factors. Key amongst these are security challenges in parts of the country, increase in food prices, and the recent hike in pump price of PMS and electricity tariff. MPC therefore emphasized the need to address structural supply-side issues by putting upward pressure on cost of production and unemployment. To address the public health crisis associated with COVID-19 pandemic, committee urged the federal government to make relentless effort to procure a substantial quantity of the COVID-19 vaccines to surmount the public health crisis and pave the way for a broader macroeconomic recovery in the country. Committee to minus 3.62% during the third quarter. At this meeting, the committee focused not only on price stability, but also on the need to speedily take actions to exit the recession. In view of these considerations, the choices before the committee were focused whether on the need to tighten the stance of policy to address rising price levels, recognizing its primary mandate of price stability, to support output recovery, or to allow existing policy initiatives to permeate the economy. Committee noted that although the appropriate response to rising inflationary pressures would be to tighten the stance of policy in order to moderate upward pressure on prices, it nevertheless felt that doing this will exert downward pressure on the recovery of output growth. Committee also felt that tightening would negate the bank's desire to expand credit to the real sector at affordable terms, not only to boost production, but also to increase consumer spending. To the committee, tightening was therefore not the appropriate response at this time. With the economy, whereas MPC felt that government spending and the bank's expansionary stance would be desirable to support recovery and guide the economy out of recession, it felt loosening would trigger excess liquidity and worsen the inflationary pressures. MPLC also felt that excess liquidity may impact demand pressures and fuel further depreciation of the currency. With respect to a hold position, committee was of the view that this will be beneficial as it will allow current policy measures to permeate the economy while observing the trend of developments. Committee also felt that the heterodox policies of the bank targeted at various sectors are showing positive results that will further engender growth. On balance, MPC was of the view that although all three options offer some benefits to the economy, the hold option was desirable at this meeting.
That was the Central Bank Governor Godwin Emefiele. Well, with me here to digest some of these developments is an economist and the chief strategist at Westphalia Resources, Mr. Joe Femi Daguru. Good morning. Thank you. Good to have you again in the studio. Well, you listened to the Central Bank Governor talking about the basic considerations there that led to the decision to leave the rate unchanged. Well, security, inflation, fuel hike, and all of that. Now, what outcome would you have considered desirable at this time?
Basically, we have to all realize that no matter what we say right now, or what we're still going to be saying about this MPC meeting, nothing can change it. The central bank governor has said it all, and they will just focus on it and continue to monitor or continue to execute all these processes. The only thing that one can reason along with him, some of the things he said, now listen, if you will reduce the rates, yes, that will be a lot, but the inflation will increase. If we tighten it, then there will be more contracts. So we have to now be careful about some of these things. We shouldn't just raise unnecessary panic. The people are already feeling the impact, whether we say there's inflation or not, whether we say there will be there is a contraction or not. The people, the Nigerians that we are talking to, they already have this feeling. They already know. Their pockets tells them, their wages tells them, their spendings tells them there is inflation. So it is not about what we're saying. It is good we're saying it for policy reasons. It is good we're saying all these things for, whatever economic jargons we want to be telling the people. But the most important thing is the people are feeling the pain already. And a lot of all complaints that are coming from the manufacturing sector is very genuine. Look at the area of car manufacturers or car assembly industry. They are looking at it. If you say now that we are reducing the cost or the rates or the levy on importation of new cars or new trucks or new buses, what happened to the manufacturers locally? I mean, can we say then that they don't deserve to have this part of this window to say, listen, parts, spare parts, and every other things we are bringing for a limited period of time. Let us have for the next 6 months, let us say, okay, we are giving you 0%. Because when you say you are reducing the levy on importation, we don't know for how long. So now that has sent a lot of wrong message into the community, into the manufacturing community. And this is what is giving some people a lot of concern. When we reduce without necessarily considering the local manufacturers, it is a bad thing. And when you look at the foreign exchange that the central bank governor did not even talk about, the central bank governor, we have to realize that even if we want to export, we need to manufacture. And how do you get the raw materials? Some of these raw materials are imported. Some of these machinery or equipment are imported. So the people need money. And every day you see that you cannot predict even the rate. Now, people have turned to the black market, buying their things, by the foreign exchange. And every day the speculators are making their money out of it. So there are a lot of concerns. You see, when you look at it, the concerns of the populace, of the masses, is not just about the MPR. It's not just about the reserves that we have. The concern is now. You see, we always have to consider the fact that when you look at the rate, the oil price is up now. Oil prices will always be up and down. So it is not a new thing. It is either you have a cold weather in Europe, it's either you have one other thing that will affect it, it's always up and down. And don't forget, we belong to OPEC. So the non-OPEC nations will come up, the OPEC plus. So we depend, our economy depends largely on so many things that will control us, not the things that we can control. So a lot of issues are a regular issue. If you look at the stock market, the bull and the bear, they will always have a fight. So these are the things that it is a common thing that we have to. So there is no surprise in all these things. For me personally, there is no surprise because you always have this up and down. How do you prepare for this up and down? Because you know the next Christmas is coming. And people are looking at it. When we are in November and December, Christmas is coming and prices will rise. So these things is just maybe for the elite that really want to sit down and be, digesting it, talking about it. But personally, I think the masses, they already know and they are feeling it. How do we get about this thing? How do we go out of this recession? And this is what people want to know.
Yes. Now, that brings to the issue of this foreign exchange, because that's a major issue here when you talk about fuel hike, when you talk about inflation, when you talk about manufacturers not being able to get going. The issue, again, lies on the foreign exchange market. And yes, just as you noted, yesterday I was speaking to the Director General of Lagos Chamber of Commerce. Of course, he raised the concern that the Monetary Policy Committee communique didn't even talk about the problem in the foreign exchange, didn't even recognize that there's a problem there. However, a question was put out there for the central bank governor concerning this issue in the parallel market. Let's hear what he said.
I do not understand what and how people who are supposed to know will begin to crave further depreciation of the currency. But we are saying, even if the currency is overvalued, shouldn't we go through a stepwise process where the shock can be less felt than where those who are supposed to know how this works begin to create panic in the market by saying that the exchange of Nigeria is 480. It is very unfortunate. But on our side, we will continue to insist that the exchange rate is determined by forces of demand and supply in the NFX market. We do not agree that the determining factor for the exchange rate in Nigeria for our currency should be based on a market that is tainted, a market where people go to offer bribes, and you can imagine where you can pay any price to buy foreign exchange to pay bribe. We are not going to be party to that, and we will continue to say this to anybody who cares to listen.
Well, for him, parallel market is inconsequential right now. Can't talk about the naira at $480. But then the question is, where do we get this dollar? Where do we get it? Do we have access to it? The liquidity, I mean, there's no liquidity in the market.
You see, the central bank governor noted the problem. He knew the problem. He's aware of the problem. He mentioned it. But he doesn't want to align with the people that are saying that, listen, our rate is being determined by the parallel market, but it is the forces, and the forces is demand and supply. He understands it. I mean, generally, he knows the problem. He knows what we're talking about. But the point is this, how, like you said, how do we manage it? What has been the management factor of the foreign exchange? You see, we have a reduction in foreign direct investment, inflow that is coming in. And as long as you have all this FDI, shortage of FDI coming in and all other factors that will determine that. You see, and the exporters are not really exporting as before. So a lot of factors will contribute to that. And there's nothing anyone can do, in my own mind, that the people will still not go to the parallel market to search or to look for their money, because they still want to keep their company, they want to keep their factory, they want to keep everybody working. So this problem will linger on for a while. You see, there are a lot of windows of opportunity. Like some time ago, we have windows opened, and I don't know how many windows that are still open right now for foreign exchange, and a lot of procedures, a lot of processes have been played into the market for a while, but it seems nothing is working as expected. But what I'm looking at is this. Even locally, when we are looking at it, look at, for instance, there are a lot of these stimulus packages. Let's call it a good name now. Stimulus packages being planned by the federal government. There's a lot of all this opportunity. People can go there, get the money, get the loan, get the grant. But let's now talk about one industry that I read about. It's this automobile industry. They said, okay, we tax these guys to say 35%, and so far we have about 300 billion or somewhere, and the people want to access the fund. I read it, and they said they want to access the fund. The fund cannot be accessed. So there are a lot of problems locally that even mitigates this success we're looking at in the local market. When they cannot access the fund, they said the money is with BOI. BOI said, no, the money is not with us. So there are fundamental issues. Where is the money? Who keeps this money? Who releases the money? I was talking to one of the executives of NASME, and he was telling us that, look, if they have 400 members' names submitted, and only 16 were given loan. And how much were given to them? Just 500,000 naira. So there's a problem. And there are a lot of problems that when you have all these windows of opportunity, stimulus packages, and it's not being monitored, or it's not being well coordinated on the right people, or the right people are not getting the fund, these people will continue to linger. It is not, you see, now look at so many, people have said so many things. People have said so many beautiful things, how to go about this thing, what to do. But the point is, even when you say how to do it, what to do about it. What about the functionality? Who monitors? Who comes back to tell us that we've tried this, it doesn't work? If the central bank governor is telling us that, look, we've done this, it's not working, and this is what we're about to do. It is not just to tell us that, okay, it can't work, you don't believe in this. Yes, you may not believe in it, but what the people are saying is the reality. The reality is in the market. The people are telling you the truth. If those people who are manufacturing trucks, they say, look, we have invested billions, and now you are saying that you are bringing new cars or new trucks into the country. How do we convince the foreign investors that are bringing their money that, look, there is profit to be made in Nigeria? So there's a lot of confusion right now, but we shouldn't just continue to, hype all these things. We shouldn't just create panic in the country. There's panic already. There's a lot of panic. Social security, security generally, a lot of things are happening right now. So we should just, reduce the tension. We should find a way to reduce the tension. People are already getting fed up to a certain level. They don't know what to do. And if we continue to raise this alarm, it will cause a lot of havoc. And then that is what I think. Right now, we should be saying the truth. We should be enlightening the people on the truth and what is going to happen, perhaps. All these are just, you speculate, you announce that it might happen, it might be this. We are expecting 2021. Okay, the Minister of Finance said maybe first quarter, this thing is going away. I'm cautiously optimistic. I don't know what statistics she has to say the first quarter, everything will be back to normal. I mean, there are things we shouldn't be saying.
Even the central bank governor shared the same sentiment that hopefully in the first quarter, we're going to get out of this recession.
The first quarter is just here. So we should be able to see what will lead us to get into the first quarter to do this. You see, recession has always been here, and it will always come sometime, because it is not a new thing. Recession, people don't even know the difference between the last recession and this recession anyway. Ask anybody in the market. You see, it is because we see it in the comfort of our homes and offices, and we analyze, we talk. But the reality, people have always been having this reality. And this is one thing we have to continue to understand. And I continue to say, until we can satisfy the whole, country, but there should be some element to show that the government is consistent with its policy and is ready to do something. The lawmakers, they have to begin to see what to do. If you say the government said we should patronize locally assembled cars, automobiles, and we still see our senators, House of Rep, even the local government people buying expensive imported cars, that is not a good signal to the people. And the federal government is saying something and the people are not doing it. So you have this review that was, the president said, okay, look, go ahead with this Orosoye review and cut down cost. But what has happened? It has not been done. So the federal government and the people generally, they want to see the effect of all these things. Enough said. A lot of ideas are there. We are not short of ideas. But the point is, how do we execute all these things? And that is what is annoying to people sometimes.
Now, a lot of people believe that the government has been focusing so much more on supply side and not, the demand side. And here we are in a recession, so we should be talking about, the demand side. You cannot just be talking about supply side without the demand side. It's
always the case. You see, when we're in this kind of mess, I call it, sometimes we find the easiest way out. We want to say what will please, some people, what will make people to understand that, yes, we're doing something. But then the people, I say, no, the real people who are feeling it, the manufacturers who are there looking at it and say, listen, I have not been able to get the money. Where am I going to get the money? And they have to, like he said, he knows, people will go all out. And the more there is a demand for the dollar, the people in the private market, they will up their ante as well. Absolutely. They will up their game. So it is when there is enough. If the central bank, if the bankers, if all the Nigerian banks, if they have enough, you don't need, you will be stupid to go to the private market. Absolutely. So that is the thing. But the thing is not there. And that's why people want to, look, if they don't go in there, you will have a lot of problem at hand. And that means jobs will be lost, companies will be closed. It will not be just what we are talking about. And that is why we have to look at it. Listen, in other countries, you go into the market, you just go to the bank, you buy your dollar right away, even to travel, even to do exchange. Here you cannot do it.
Mr. Doguro, just hold your thoughts there. We'll come back again. Well, interestingly, prior to the MPC meeting, the central bank released what it called the Inflation Attitude Survey for the third quarter. The Director of Monetary Policy Department of the central bank, Dr. Hassan Mahmood, will be talking to us about this. We'll be back in a moment. Thank you for staying tuned. And of course, Mr. Joe Femi Daguro is still here. Yes, the question a lot of people, or rather, will I say, is the concern? Well, not just for Nigerian central bank across Africa. You know, a lot of people believe, a lot of analysts believe that the central bankers have really exhausted its monetary policy options as it is now. Do you think so?
Well, you see, there will always be options, no matter what we think or no matter what we do. You see, but the options might be, less than what everybody expects it to be or to work the way we all expect it to work. But the good thing is this, there are some other options, other opportunities for the economy to bounce back. And I think one of the things is that thanks to all these young men and women, if you look at, there will be, I can imagine funds coming in 2021, more funds coming in through acquisition and investment in the fintech industry. The technology industry is going to be a more, we experience a robust patronage because, if you look at this year alone, I think we should be having almost about maybe $500 million or $1 billion that's already been, brought into the market. And next year, I think we'll have more of it because the opportunity is there. E-commerce will still continue to, increase and people will still want to come into the country. I'm aware that maybe Amazon is coming in with some billions and there's still opportunities. And look at that young man, I must say that, one Umar Dagona from Yobe, he went out of this country with little or nothing, and he was able to bring in some almost $500 million, $500 million naira, just by what? He won a competition, a chemistry competition, is from Yobe. So you can imagine if you multiply that even at the central bank rate, this is over 180 something million. That is more than what I think the budget of his local government is. So there would be opportunity, giving the young people the opportunity to expand and to to improve and to do things their own way too. I think that is another market we have to look into. I'm not in agreement with when you say, or when the central bank said that the governor said, oh, listen, harvest is going to come and there will be bounty harvest. Yes, it is expected. All these are expectation, but I don't think this is what will happen. Because you see, there are a lot of problems already. We have floods in some of these areas. We have security challenges. You have transportation issues. But it is expected. So the expectation might not meet the needs of the people. So these are the problems. I understand this gentleman will have a big challenge, and how to tackle the challenge will be a lot of problems.
Absolutely. Yes, now we are in recession. Of course, there's one can imagine how much every problem, the monetary policy can actually solve. So what sort of synergy do you think should exist at a moment like this between the monetary policy and the fiscal authorities?
You see, right now, I said it somewhere that, listen, government should not embark on projects that are not really, really necessary. We have a lot of projects right now that should be completed. That should be the focus. And one of the biggest one that concerns the people is the transportation. Let's make our rail system, let's make them work. Transportation, if you can make the rail system work accordingly and to the specification of what it is globally, I think we'll have a bit of all this problem resolved through that. Let's make our waterways. Let's make it safe and let's make it work. There are some, they are building bridges. Let's do that. And state government should not just continue to build bridges where the bridges are not necessary. Airports should not be, our target now should not be how to set up an airline for Nigeria Air or whatever. That should not be one of our targets. It's not necessary for now. We don't need it.
We have to prioritize.
Yeah, we have to prioritize our needs. And we have enough people in the aviation industry. Let's give them a boost. Let's support them rather than thinking at all that we want to set up our own airline. I don't think that is what we need. That is something that we shouldn't even think of it at all, not to even bring it to the public, because you see most of the people doing it. South Africa Airline is almost bankrupt. If it's not bankrupt, it has never made money for years. It's been pushed and pushed into the market to raise money, and nobody's ready to fund it. So look at the Kenya Airways. Only the Ethiopian airline that is doing well, and that is what they know how to do. They've been doing it for ages. Lufthansa is publicly quoted in Germany, and British Airways is not something that the government is funding so bad. You see, private sector, they know how to manage it. Until we begin to allow the private sector to manage certain product and certain industry very well and support them, just give them a level playing field. And those are the things that we have to continue to support the private industry so that they can take out all this headache from the federal government. We just need to have good laws and good opportunities for people to come in and play their part. And don't forget, until we begin to reduce the cost of governance, that will continue to be a problem. And people may not be able to trust every other thing the government is saying. Whether it's the central bank, whether it's the federal government, whether it's the state government, let us reduce the cost of governance, because it is one of the problems, it is one of the bane of this society. We have too many ministries, too many MDAs in hundreds, if not in almost in thousands. What are all these things people doing? They are overlapping functions, and people have said it. If they begin to review all this, we will save money. I'm not saying throw all the people there working, throw them into the labor markets again as unemployed citizens. No, but we have to make sure that we review all these things and let us have, look, there will be unemployment. We cannot solve the unemployment issue at a go, but let us continue to provide opportunity that these people will continue to think there is a chance for me, there's an opportunity for me in this country.
It's always a pleasure to have you on the show, Mr. Femi Daguro. Thank you very much. I do appreciate it.
Thank you.
Right. Now, the Inflation Attitude Survey is conducted by the Statistics Department of the Central Bank of Nigeria, and according to this department, the survey commenced in June 2009. Well, joining me now to tell us more about this survey is the Director, Monetary Policy Department of the Central Bank, Dr. Hassan Mahmood. Thank you very much, Dr. Mahmood. Thank you for joining us on the program. So, tell us about this survey and why it's important.
Okay, thank you very much. I actually, in the communique that was released by the central bank yesterday and was read by the governor, which will show some of the clips, we gave a guide on the inflation numbers and including inflation expectations. We also gave a guide on the drivers of the inflation and why we will have to address the rising inflation to be able to meet the central bank primary mandate of low and stable prices for the domestic economy to drive domestic investments and saving. It is clear that the numbers are rising, and it's been rising in for 4 consecutive months now, and we are in the territory of for 14.23, or the last October numbers that we have. And if you compare that with the rate, the policy rate of the central bank, then you see that the inflation number is is wiping away the welfare effect of any GDP growth that you are finding. And if you discount, that's why if you look at the real GDP rate, you see the numbers are going negative. And it is very important because inflation is what really translates to the impact of the central bank policy to the rest of the economy, particularly the traders, the businesses, and the income earners. So it is very important that we look at that and then make a forecast, even though the central bank is not explicitly an inflation targeting monetary policy framework. However, inflation projections are used in the determination of how the monetary policy choices are made in terms of where do the monetary policy rate go to signal development in the domestic economy. And like I said, expectations are still that the numbers will go up given the floods, given the electricity prices, given the VAT. You know, those factors, including the structural factors that you also mentioned earlier and Mr. Femi also mentioned, are still going to be driving these numbers high. So while you are also stimulating aggregate supply, you should also be looking at the demand side and seeing how people can earn income to be able to drive the inflation numbers down.
Well, talking about the forecast here, we listened to the central bank governor. He talked about the fact that he was optimistic that inflation number will taper down soon when we start having our harvest and all of that. So just wondering how that is linked to this survey.
Which are what we call unconventional tools now to address the problems in the economy, particularly addressing the crisis that came out of the pandemic, the COVID pandemic that led to the restrictions of economic activities or lockdown of the entire economy. The structural rigidities that are causing this rise in the supply side push inflation number will have to be addressed. And how will that be addressed? By supporting manufacturing, households, SMEs, and those that are into petty productions. However, while that production is going on, you still need the other side of the equation, which is the people to buy those things, people to clear those inventories. And that is where the income, the household income, and the other stimulus packages to drive this income will come in. While you are producing and engaging the labor force, that labor force is earning wages and salaries. And those salaries, it's not what you produce generally, like people that work in the car manufacturing industry or other businesses. They eat food, they pay electricity, they take transport, they go for holidays and stuff like that. So when that income side, which is the demand side, is also boosted, then you have people to take off what is being produced. And that is how the equations builds up, and then the prices come down. So we want supply to be enough to beat that demand pressures. And if that happens, then you see the prices going down. In any case, the supply will also still be making even, so that the business is also functioning. So the forecast is for inflation numbers to come down to the targeted level, which is the single-digit inflation. We are not expecting to see that in this year, but we're expecting that when the interventions, both the fiscal and monetary, are properly permeated or properly implemented and permeated through the economy, then we should start seeing that picking up by the first and second quarter of 2021, and then the numbers will start coming down.
Now, in your survey, you looked at about 4 areas: inflation, interest rates, the nexus between interest rate and inflation rate, and of course, opinion on the Central Bank of Nigeria. Can you talk to us about your key findings on these areas?
Okay, generally why we look at interest rate and inflation is what we call the real effective interest rate. Now we're in the negative margin. We have negative real effective interest rates, and that is for domestic savings or investment mobilization. When your interest rate is way above, your inflation number is way above your interest rate, then it's not attractive because the gains is already wiped out by the inflation number. And domestically, you start seeing discouragement in terms of savings or deposit, and in some cases, if you extend it for some open economies, you start seeing also investment inflows will also be drying out because that margin, that yield is thinning out, and that is not attracting investment. But you need those investment, private or corporate, to come in to supplement government spending or state spending, because we all know now, particularly during this crisis, that government earnings is shrinking substantially. So you need this alternative sources of financing, which is also more effective and efficient to drive the growth that you are looking at. So that nexus is extremely very important, and the central banks and the fiscal authority are also looking at that very importantly, so that they can have that inflows and then mobilization, savings, the national savings mobilization to drive the domestic growth that we are looking at. In terms of the expectation, like I said, we still have pessimism on the part of the general public, or some of the general public, in terms of where the inflation numbers are going to go, thinking that because prices are already going up, particularly food prices, and bringing in these other factors that I brought in, the electricity, the liberalization of the oil sector, and people only look at one side of that liberalization because it's now floating. So when international oil prices also go down, then you also start seeing PMS, we hope, we'll start seeing PMS prices also going down. However, because prices are still somehow high now, you see that translating to the domestic prices of these end products of the oil sector. So if those factors are still there, and then you have the security issues that are also stopping goods from coming from the hinterland back to the urban areas where they are largely consumed, the transportation issues, the kidnapping, banditry, and all those other issues that are also impacting on the flow of these goods and services to where they will be needed, then you see that pessimism is justified, and then we will start seeing people taking positions early enough to withstand that, which is further complicating the issues. But like we said, if we allow all these interventions that both at supply side and demand side driven or targeted, then we'll start seeing the outcome, the expected positive outcome from this, permeating the rest of the economy, and then we'll start seeing the prices adjusting, using these forces of demand and supply.
Now, Dr. Mahmood, is it possible to have a low inflation rate as well as a low interest rate?
Well, it depends on your policy objectives. While low interest rate is good in terms of expanding credit, if you look to the rest of the economy and driving the expected output growth, you also look at the investment side. Low interest rate is also not attractive for investment, and you need to mobilize those investments to be able to drive this credit expansion that they are looking at, or facilities to the rest of the economy. So it's a balancing thing, and it depends on what state of the economy you are in at a particular time and what are your priorities. Like it's also said now, yes, we have a recession, the growth is negative, and then you have inflation numbers going up, you have the exchange rate numbers there, but the priority now is to drive growth and get out of the recession and start worrying about it. So if you have that objective, then you'll be looking at low interest rate that will let the general public, investors, have affordable credit to be able to expand and build their businesses, and also recruit people, engage people in employment that will be able to take off those goods that are produced. So at no particular time can you say this is the best way to go. But stable inflation, stable prices is what is most important. The fundamentals would drive where your rate is, including, when I mean prices, I also mean exchange rate, interest rate, and all of the prices in the money market and fixed income market. What is important is the stability for the investor to be able to make their projections and draw their investment line and expectations, so that you don't have arbitrary hedgings and stuff like that in the system, which distorts the price discovery intention of the market in the first place. So it's very difficult for anybody to tell you that this is where you should stay now. But low and stable inflation rate, it's very important for you to drive a welfare-driven, inclusive, poverty reducing and employment generating growth, output growth. Right.
Well, over time, the central bank have always talked about inflation targeting, trying to bring down the rate of inflation, but that seems to be difficult, for some time. And then with this survey that you have conducted, how satisfied do you think people are with the central bank's management of interest rates as well as disinflation targeting in Nigeria?
I think in the recent report by the central bank, we saw that the proportion of people that can take facility below 20%, 15% interest rate has increased substantially over the period. You're aware of times where interest rate, or that's, I'm talking of lending rate now, is way above 30% for, the high risk, non-premium lenders or borrowers. And then that number has been coming down substantially. One, through regulation and prudential, guidelines of the central bank, and through also the efficiency on the part of the banks or the financial institutions in trying to package some of these products, credit facilities in an efficient way and monitor them effectively, by also assisting the borrowers in terms of their entrepreneurship and investment profile. So you see that efficiency building up, the risk-based assessment of all these facilities and the robustness of risk management mechanism, bringing out the ability of banks, financial institutions, and regulators to be able to, effectively monitor how these credits are applied to economic activities, and then bringing down the cost effect or the premium, the large premium that is under de-risking some of those, concerns. And so you see the rate going down substantially, but for some other, prime borrowers, you see that the rate is even below 10%. And in this crisis, actually, the interventions of the central bank are 5%.
All right. Thank you very much, Dr. Mahmood, for educating us on that inflation targeting. Let's just hope that the central bank is able to use this survey to come up with better monetary policy. Thank you. We appreciate your time.
Thank you. Thank.
We'll take a break, and when we come back, we'll make an opening call to London and, of course, look at our local markets here. To stay with us. Well, it's another brand new day, and Juliana, my colleague in London, is all in a bubbling mood, looking forward to Christmas with friends and family. And, of course, there is a government spending plan to be announced today. So let's get details from Juliana. Good morning, Juliana. Well, ahead of Christmas, Chancellor Rishi Sunak will today unveil the government spending plans for the coming year and a sneak peek into what Sunak will present.
Yes, a little one, but the overarching theme is that saving, not spending, will dominate this lunchtime's spending review. Typically, a spending review pans out what the government is going to be spending in public services over the next 4 years. But given the crippling backdrop of COVID-19, we're only going to expect a 12-month spending review. The Chancellor will talk about the NHS, about overseas budget, about teaching, schools, and we are expecting some sectors to get a bump up. Levelling up has also been a major agenda for Boris Johnson's government. That was really part of his campaign manifesto. There are so many parts north of England, or north of London, that when you get there, you can see a rather stark contrast between infrastructure and development there compared to London. But the pandemic has really delayed lots of those plans and promises. So it would be interesting to see just how Chancellor Rishi Sunak is going to please what was once called the Red Wall. We are also going to hear about how much is going to be given to devolved nations. So that's Northern Ireland, Scotland and Wales. Even though, of course, we had that shared statement yesterday, there's been lots of tension between the devolved nations. They certainly don't believe they've been getting the economic benefits that England may have been having. So when it comes to what exactly the Rishi Sunak will be mentioning, we have had some leaks to the media over the past couple of days, and we've discussed them on this programme. One of them is the overseas budget. Currently legally stands at 0.7% of gross national income, which I believe amounts to about 7 or 8 billion pounds. That is expected to drop to 0.5%. There have been lots of concerns about that. Public spending or public sector pay. So this is pay for NHS workers, police, teachers and civil servants. We're expecting the Chancellor to announce a pay freeze, although when that was leaked to the press a couple of days ago, there was lots of outcry about the 5.4 million people who this will affect and how much they have been giving to try and keep the country working throughout the pandemic. So lots of speculation, but we won't know the full details until 12:30 local time, which I believe is 1:30 Nigerian time, when Chancellor Rishi Sunak speaks. But at the moment, we're 350 billion pounds in debt. And of course, the economy is expected to contract by 10% by the end of this year.
Okay, we hope to get update on that. Well, leaders of the 4 UK nations have agreed that up to 3 households will be able to meet up during a 5-day Christmas period of between 23rd to 27th of December. But Wales First Minister warns it's not an instruction to meet people. What's the disposition of many Londoners towards abiding by the COVID-19 rules and ensuring a safe and happy Christmas?
Well, it's difficult to say, really. Of course, Boris Johnson is a populist leader. He likes to please the public wherever he can. But you'll be hard to find anybody that's desperately seeking to meet with extended family over Christmas. There are some people that are actually even thinking that the government has got this wrong, specifically the scientists, the hospitality sector. They're not happy. What was announced yesterday is that between the 23rd and the 27th of December, so for 5 days, up to 3 households can mix during Christmas. Scientists are saying this is completely wrong. It's absolutely the wrong thing to do, especially yesterday we had a further 666 individuals die from COVID-19, a further 11,000 people tested positive. So we're certainly in the peak of the second wave. And there are questions as to why some people cannot wait just a couple of days or a couple of months until the vaccine is completely rolled out to see their loved ones. Of course, we know Christmas is a huge holiday, not just for people who are Christians, but it's a holiday, it's a national holiday that the entire country has adopted. But there are some people that are saying whether or not the government got it wrong on this, particularly for the hospitality sector. So what the government is saying is that you can mix in the household, but you can't go down to the pub. And the pub, for a lot of people in this country, is a staple when you're meeting with your family, particularly over the Christmas time. And that's really where they get a lot of their revenue. So there's mixed reactions to this. On the one hand, people are happy that they can see their loved ones. On the other hand, considering over 55,000 people have died and are still dying in this country, it does leave some people, questioning whether or not it's worth it.
And speaking of the vaccine, global markets jumped yesterday. In fact, U.S. shares hit fresh records with the Dow Jones Index closing above 30,000 points for the first time amid hopes of strong economic recovery and end of political uncertainty in the U.S. Is that sentiment being carried over into this Wednesday?
It is being carried over. The FTSE 100 off to a strong start. I believe they're up by about 0.5%. The FTSE 250, the little brother, that's up by about 0.1% at early trading. Of course, the sentiment about President-elect Joe Biden's super team has really spurred markets. People are really happy about that. We did see some ebbs and flows about the optimism of the vaccination, but here in Britain, the fact that people could be vaccinated within the next 2 weeks has really spurred markets. So it's a good day on the FTSE, and of course, all eyes are going to be glued on the House of Commons when the Chancellor gives his spending review, which is likely to push the pound up against the dollar. At the moment, I believe the British pound is 0.3% higher on the US dollar.
All right, Juliana, we'll talk to you later in the day.
Thank you.
And of course, back here, equities market rebounded yesterday. Let's talk to Afolabi Gbero, stockbroker with Stanbic IBTC. Good morning, Afolabi. Thank you for joining us. Well, the gains we saw yesterday at the equities market, would you attribute it to the outcome of the MPC meeting yesterday?
So yes, the market was activities were a bit quiet yesterday. We just saw activities in them, especially in the banking sector. The banks have been the most active in the last week or so. The likes of Zenith Bank and Guarantee have been driving activities, mostly on the back of local participants in the market. Yes.
And do we see that continuing into midweek trading today?
Yes, I mean, so far today, the most active stock has actually been Dangote Cement. Dangote Cement opened up plus 2.6%. About 9 million shares have traded. Also on the back of local participants. We've been seeing more of local action in the market over the past week or so. Zenith Bank has also been active today. It's up about 4%, trading around 25 naira, up from yesterday. So we expect that to continue to see, those interest in the banking stocks as well as in Dangote Cement for the rest of the day.
All right, thank you, Afolabi. We wish you a profitable trading day. And that's a wrap on today's program. Thank you for watching. I'm Chimezie Obi. Welcome.